And there's that part that nobody is writing about. The price is doing whatever the price is doing. But underneath that, something structural is shifting. And if you've been in this long enough to know the difference between noise and signal, I think you're going to want to hear this, folks. We've got a story forming right now. It's a big story. It's the invisible layer that you can't see being built, but it's being built. And that's what we're about to talk about. Let's get into it, folks. And remember, the new channel, Rip Talks Money. Folks, get on over there. I'll link it down below. Go search it up on YouTube. This is going to be the channel about life after crypto. What do? You need a game plan. We'll talk about financial freedom. We'll talk about investing, retirement, what works, what doesn't work, real data, real proof, real experiments, as I like to call it. Make sure you go over there, subscribe right now. Every new video, I should say, comes out Monday, 11 a.m. Eastern Standard Time. So let's talk about the stuff that most people skip because they call it boring. But let's talk about volatility. Look at what Smoke posted. Okay, this is pulling a piece by Protego Trust Bank. You probably never heard of them. I get it. But just because you didn't hear about them doesn't mean it doesn't matter. Now, does it? Protego isn't a crypto startup. They are actually a federally chartered trust bank. Can't forget that word. Regulated, traditional finance. And they're writing about what happens to crypto markets when institutional money starts dominating the space instead of retail. Exactly the shift that is happening right now. Now you can see the highlighted section. It says it very, very plainly. Market maturity through institutional adoption. It happens by reducing volatility and defragmenting liquidity. They specifically call out ETFs and IRAs as mechanisms that create more long-term holders, which dampens the wild swings. And then they drop this line. When the crypto market is dominated by retail investors, many without long-term objectives, huge swings are par for the course. But as the market matures, we should see reduced volatility and an increase in confidence among both institutional and retail investors. I've been following FortisX for quite some time, and what I like is that they continue to move towards greater transparency and security. Their platform is designed for long-term holders who want to put assets like XRP to work through liquidity pools and simply instead of keeping them idle. Over the past months, the team has completed audits with CertiK and Cyberscope, and they made the company publicly visible through SEC Edgar filings, and recently they launched a 50,000 CertiK bug bounty program so independent security researchers can test the platform. They clearly keep investing in security and transparency, which is exactly what you want to see from a project, folks. If you've been holding XRP for the long term and you want to learn more, check out the link down below. This is the exact playbook I've been talking about for nearly a decade. The more money that comes in, the less swings you get. The crypto market's going to act like the stock market at some point. When we get 5 trillion, 8 trillion, 10 trillion, somewhere within 5 to 10 trillion, we will stop seeing 90% pullbacks. If you look back to 2013 to present day, and I made a tweet on this, we are already seeing each bear market, the price corrections are getting less and less. We started at 90. I believe we're all the way down to about 70 to 80% swings. The more money that comes in, the less these swings are going to be. I've said it. The institutions would never enter this space with their $1 million, billion, trillion dollar clients and assets under management if there was a chance that they could lose up to 90% of what they put in. It wouldn't happen. It wouldn't happen. This is a trust bank that said this, writing this, explaining why the next phase of this market is going to look fundamentally different from every phase that has come before this. Not because the assets changed, because of who is actually holding them is changing. Think of it like building a house. When you pour the foundation, nobody drives by and says, wow, look at the foundation. Nobody goes and takes a photo of the concrete. Nobody's getting excited about the rebar. But without it, nothing else stands. That's the chapter we're in, the foundation work. The part that doesn't look like anything yet from the outside. Think about that. Now let's just back up real quick, because I think there's a misconception that runs through a lot of conversations about why the price hasn't moved the way people expected. And I think this clip that I'm going to show you right here, it gets it gets at that directly. Let me set this up before we listen to it. The clip is making a case of why institutional investors are still optimistic despite recent volatility. And the specific argument is one that I haven't heard framed like this yet. Listen, let me see if I can.
Prices have fallen dramatically in the past couple of weeks. And while all that is going on, the S&P's hit a 24th record this year. The Dow and NASDAQ are both at record highs. And yet, as of last night, Bitcoin is down 27% for the year. Ethereum and Solana down more than 40% for the year. But at the same time, it's clear that tokenized stocks are coming. The New York Stock Exchange has announced that they're planning to launch 24/7 trading for clearing, settlement, capital formation, and data distribution. NASDAQ is doing the same thing by partnering with Kraken. Securitize, the largest firm in the RWA space, working with some of the biggest TradFi organizations, has just announced a deal with ComputerShare to begin issuing tokenized securities. And it's not just tokenized stocks that are coming, tokenized ETFs are coming as well. All the major asset managers are racing to launch tokenized securities and ETFs, and tokenized cash is coming. Stripe, Visa, and MasterCard just announced last week they're backing the new stablecoin platform. Visa is now settling stablecoin deals on 9 different blockchains. They're running already at a $7 billion annual rate. That's up 50% in just 3 months. JP Morgan Chase, Citi, B of A, and Wells Fargo have together announced they're launching a tokenized deposit network. Goldman Sachs has launched a stablecoin reserves fund. Ondo, JP Morgan, MasterCard, and Ripple just did the first cross-border, near real-time, cross-bank redemption of a tokenized US Treasury fund. And they did it not in the usual 3-day settlement, but in 5 seconds. This is revolutionary. Meta has announced they're going to allow stablecoin payments for its 3 billion global users. Everybody's looking at Morgan Stanley with 16,000 advisors. Meta's got 3 billion users. And for all those reasons, retail engagement is rising. Schwab is going to start allowing its clients to trade Bitcoin and Ethereum for 75 basis points. That is half of Coinbase's fee. Schwab has got Coinbase in its eyes, and it's going to go directly after them. Wells Fargo is doing the same thing with its own crypto exchange. Morgan Stanley, as you know, has already launched a Bitcoin ETF. It's coming soon with Ethereum and Solana, and it has told its 16,000 advisors that it wants 2 to 4% of client assets in crypto. By the way, just think about that if you've got $7 trillion and 4% of that goes into crypto, you add up the math, that translates to $16,000 worth of price added to Bitcoin. So if Bitcoin is currently at 65, increase it by 16 grand just because of Morgan Stanley. Now go add Merrill Lynch, Goldman Sachs, JP Morgan, Wells Fargo, UBS, and you can see the incredible price increases that are coming by the engagement of the wirehouses. And that's why Wells Fargo has announced they're doing the same thing with their own crypto exchange. Morgan Stanley is also allowing their clients to invest via E-Trade. You're going to see a big price war coming. Coinbase at 1.5% each way of the trade. Schwab has announced 50% reduction. E-Trade is less than that. So we're going to see prices come down dramatically, just like we saw a price war in the Bitcoin ETFs. Goldman's getting in on the game too. They have filed for a Bitcoin income ETF. PayPal is now processing crypto trades on the Solana blockchain. Fannie Mae is accepting crypto as collateral for mortgages. The House Ways and Means Committee today is holding a hearing on 7 crypto tax bills, creating the clarification for how we handle taxation with crypto. So is it any surprise that in the new Digital Asset Survey of 2026, just released by Institutional Investor magazine, 75% of institutional investors say they plan to buy more crypto? 94% of institutional investors who don't yet own crypto say they plan to allocate this year. So what's going to happen when you have all the institutional investors and pension funds, endowments, sovereign wealth funds, all family offices and more engaging with?
Like, do you understand what this man is saying? I mean, I'm speechless. This is insane. And he's right. He is absolutely right. In prior cycles, price led and adoption followed. That sequence has now inverted. I've been trying to put words to this feeling for a while, and that's it. And that's exactly it. In every previous cycle, the price went crazy first, and then the actual use case scrambled to catch up. Right now, it's the opposite. The infrastructure is being built. The institutions are positioning. The on-chain fundamentals are moving. And what's happening? Price is lagging. And he calls it what it is. A temporary disconnect, a window. Not a failure of the thesis, not a sign something is wrong. A window that your sophisticated capital is explicitly recognizing and positioning for. If you've been holding for years, you are by the definition someone who identified that mismatch before most people, before most funds, before most of the analysts now putting out research notes about it. And that is why this matters. Here's Just a little 16-second clip about it, folks. About Ripple, very specifically.
First fund, Ondo, JP Morgan, MasterCard, and Ripple just did the first cross-border, near real-time, cross-bank redemption of a tokenized US Treasury fund. And they did it not in the usual 3-day settlement, but in 5 seconds. This is revolutionary.
Let that sink in. Ripple, JP Morgan, MasterCard, and Ondo. Talking about the first cross-border near real-time cross-bank redemption of a tokenized US Treasury fund in just 5 seconds. I don't want to over-explain this. This section, the words right here, they speak for themselves. But just to be clear of what they did, they settled a tokenized treasury across borders between banks in seconds. That is your infrastructure chapter. That's the foundation chapter becoming visible. And it happened. It's not some roadmap item that we're all waiting for that they talk about and it never comes to life. This has already happened. The amount of time that we spent waiting for exactly this kind of thing to exist, and now it does. And the price is still doing whatever the price is doing, which brings us over to this. Anthony Scaramucci, billionaire, right? Former Wall Street guy, not a permeable, not someone who needs your engagement. Here's what he said.
Expectations they should set for their own time horizon?
Such a great question. So the first thing I would tell them is you got to do the homework. Don't buy it indiscriminately without having some awareness of what I'm describing to you, this sort of decentralized hardened spreadsheet, which has the technical properties associated with things that we attribute to store value. You have to get conviction on that first.
Okay.
If you get the conviction on that, buy a small amount of it. You don't have to buy a super amount of it. I could be wrong, and I want people to know that. The third thing I would say is you have to have at least a 4 to 5 year period of time with Bitcoin. Don't trade Bitcoin. I don't know anybody that has bought any high in Bitcoin that has not made money. So said differently, if you bought the high from 5 years ago, you're probably in the money right now. If you bought the high in October at 126, you're not in the money, but I would imagine between 2025 on your way to 2030, you'll be back in the money. Every rolling 5 years, people have done very well in Bitcoin. And so you have to have a minimum of a 5-year horizon.
There you go. You got to have a minimum of 5-year horizon here. And it applies to all these assets, not just Bitcoin, right? Only human feelings have changed, not the actual asset. That's the whole thing right there. That is the entire psychological battle of being a long-term holder, all summarized in one sentence. The assets didn't change. Your feelings changed. His feelings changed. Everyone's feelings changed. But the asset is the asset. He bought a Bitcoin at 126K and he still has a Bitcoin. The number on the screen is different, but Bitcoin's still Bitcoin, right? Think about that. XRP still XRP. Nothing has changed. Maybe visually on the screen, your chart, your price chart, tracking portfolio. And if you're not using the one I build, xrprightnow.com, get up over there. Maybe that number has changed, but one XRP is still one XRP, and the fundamentals are stronger than ever. Maybe it's in the red. Okay, I get it. Look, it happens. We're not going to always time a bottom. Maybe we timed the top, and we had to ride it to the bottom just to ride it back to the top. But he stated it very clearly. You hold it throughout a cycle, you hold it for the next 4 to 5 years, it's going to flip back, and you're going to be back in the green. It's all about patience. It's all a waiting game, folks. No one said this was going to be an easy journey. You're going to make it to the finish line, and the finish line is when you're in the green. The finish line is when you move over from listening to all your crypto videos to now going back and coming over to Rip Talks Money and learning about what to do, when to do it, how to do it, and what it looks like so you can start making your own game plan. I'm going to leave it like there. I hope you enjoyed. Go hit that subscribe button over on Rip Talks Money. Hit that like. I'll see all y'all on the next one.